It's the earnings rundown for the week of February 3rd, and it was a big one in Adland. Many of the major players stepped into the earnings confessional to share their Q4 results. The verdict? Ad dollars are still flowing, but not everyone's riding the wave the same way. Let's start with Google. Search and YouTube is still raking it in. Ad revenue up double digits thanks to election spending and retail. But Google Cloud came in light, and investors weren't thrilled about the $75 billion AI infrastructure bet, sending the stock down 8% in after hours. Then there's Amazon, and its ad business is booming, up 18% in the quarter, and now running at a $69 billion annualized run rate. But like Google, softer than expected cloud growth weighed on shares, and an eye-watering $100 billion capex number for AI infrastructure didn't help. Still, high-margin ad revenues offsetting costs, and Amazon's advertising flywheel keeps on spinning. Over at Snap, the turnaround is taking shape. Revenue up 14%, back to profitability, and Snapchat Plus is now a $500 million business. Direct response ads are thriving, and thanks to TikTok uncertainty, advertisers are spreading budgets across platforms, and Snap is cashing in. Similarly to Snap, Pinterest is seeing advertisers embracing their performance-driven ads. This drove 18% revenue growth in the fourth quarter, as more brands are using Pinterest to drive direct conversions, and AI-powered ad targeting is making it easier to turn scrolling into spending. Meanwhile, global monthly active users, good old MAUs, hit a record 553 million for the social media platform. Investors liked what they saw, and shares popped 20% in the aftermarket. Over on the holdco side of things, Omnicom delivered solid 5.2% growth, with media and precision marketing leading the way. But of course, the real story is the pending IPG acquisition. If they pull off the alleged $750 million in synergies, the agency landscape could look very different in the back half of 2025. And then there's Publicis, and it was another quarter of outperformance for the French holdco. 6.3% organic growth, 18% margins, and an AI-driven strategy that's keeping them ahead of the pack, at least for the moment. While rivals are restructuring, Publicis is playing offense, pushing forward with 800 million euros in acquisitions. Call it strategy, call it savoir-faire, either way, whatever they're doing, it's working. So what's next? Everyone had a strong finish to 2024, but cautious optimism is the name of the game for 2025. The macro environment remains unpredictable, and political developments could shift brand spending sharply at any moment. The next few quarters will be a test of discipline, balancing AI investment, cost efficiency, and market share gains in an increasingly complex landscape.